Hey friends, Lucian here with the Bullish Bears team. This video is going to be about the different trend trading strategies that you can use when trading. I'm going to give you an overview of some of the most popular strategies, and then I'm going to show you on a chart when you would look to potentially take one of these strategies. So with trading in general, you're either going long or short in a market when you're trading shares of a stock. So when you're doing shares, you need to either be long in a bull market or when the stock is going up, or short when the stock is bearish or the market is bearish. So with trading shares of a stock, you can really only be long or short. Now, with options, it's a bit different. Again, if you need help with options, make sure you take our options courses. That'll help you really understand all the different strategies. So again, just because I'm showing something here, I'm just giving you a highlighted overview. I'm not going to break down options. I'm going to tell you what strategies that you'd look to potentially employ, but obviously you have to understand how to trade options before you do them. So make sure you take our courses, our options courses, if you need more help. So naked calls would be a replacement for longing shares. So when a stock or the market is bullish, you might take a naked call or buy a naked call. When your stock is bearish or the market is bearish, you look to take or employ a naked put. So when you go into the spreads arena, when you're looking at a call debit spread, that is when a stock is bullish. A put debit spread is for when a stock is bearish. And then when you go into credit spreads, a put credit spread is for when a stock is bullish. And then a call credit spread is for when a stock is bearish. And then you'd look to do those iron condor strategies for those range bound or markets that trade sideways. So now let's take a look at some examples of when you would employ these trend trading strategies. So again, when you're doing trend lines and finding the trend, you want to ideally connect, at least 2 to 3 peaks and valleys on a chart so you can get the trend overall. When you're doing, with swing trading, you want to find those longer term trends. This chart right here is just of a daily chart of Apple. So this is more if you're kind of going those few days to maybe a couple weeks, few weeks out. You might look at those daily charts. If you're going a few weeks, maybe to a few months, you'd kind of change things out to maybe those weekly or monthly charts. So again, you'll see these lines, you'll see those those trends or those channels that I've created. They're not always going to be perfect, but again, this kind of gives you an example of what to look for. So you'll see right over here, to the far left, you'll see kind of a sideways market, right? Or those range bound, markets, or this is of Apple, so Apple's trading sideways. So these strategies, it can be very tricky to go long or short because price bounces around pretty quickly. So you have to catch the move the right way. Otherwise, you can get kind of caught up in here. So when you're trying to go long or short here, you get those those short-term bounces, and they can trap you, make you frustrated, especially with options. You can lose time value and with time decay. So you can get kind of caught up if you're trying to go and pick a direction with a range bound market. And that's where iron condors, a strategy like this is good for those range bound markets because market is trading sideways. So, again, with options, that's what's awesome about them. You can still trade and make money in sideways markets where you can't do that really, or it's much more difficult with trying to choose a direction by going long or short. So then you can see kind of these channels, right? So price is kind of falling down right here. So you can see a downward channel. So there's a bearish trend right here. So that went sideways down to a bearish trend. So when you're doing or trading a more bearish trend, you would go short potentially if you're shorting shares of a stock. Again, know the risks associated with going short. Again, the longer you hold, if you're not careful when you're short shares of a stock, it can go against you. So make sure you understand how to short. If you're looking to do options, you could buy a naked put for when price is falling. Again, risks associated with buying naked calls or puts. But again, that's the strategy that you would use, in bearish type of trends. You'd look to buy a naked put for buying options, and then you would go into the spread strategies. So if you're looking at credit spreads, when a stock is falling or it's bearish, that would be a call credit spread. Or if you're looking to do a debit spread, it would be a put debit spread for when the market or a stock is falling. So then you can see kind of down here, the market starts to kind of change, starts to break out of this channel, right? You can see it kind of goes up right here, kind of reverses. And then obviously you can kind of see right up in here, you can kind of, again, draw your trend lines. Not always going to be perfect, but you'll see price, again, kind of starts to change and reverse and changes course, right? So now you can see it's starting to do more of a bullish trend. So when you are looking at more of a bullish trend, this is where you would look to do, with shares, you would go long. So if you're buying shares of a stock, you'd be long. Or if you're going to buy a naked option, you would buy a naked call, right? So instead of buying shares, you'd buy a naked call. Or, when you go into spread strategies, this is where you would look to implement a put credit spread if you're doing a credit spread, or a call debit spread. So these are more of the bullish, or these are bullish strategies, longing shares, buying a naked call, put credit spread, call debit spread. Whereas those bearish strategies are when you go short, you buy a naked put, you're buying a call credit spread or a put debit spread. Again, we break this all down in our options courses. So as you look again into the future, you can see price is really still continuing to move up right in here. And then you can see kind of this downtrend. It's kind of reversal, breaking down. Lots more volatility here. It's shorter trends. Obviously, lots going on with the coronavirus and the election this year. So ideally, you want to find the longer term kind of trends. But again, you can make money short-term swing trading. So this is more of long-term strategies right here, longer trends right here. And then you find those shorter-term strategies as well. So that's why swing trading can be, a few days up to a couple weeks, or it could be a few weeks up to a few months. So you can employ these strategies. This is just a daily chart. You can put them on weekly charts. You can do them on hourly charts. You can do them on monthly charts, right? But the whole point is knowing when to employ each strategy based upon the way the trend is heading. So you'll see up here again, price starts to reverse and falls. And as you can see, as it's falling, this is where you would see, either take a potential short if you're shorting, buy a naked put if you're doing naked put, short-term option strategies. Or again, you can do something like a call credit spread or a put debit spread. And then when markets kind of trade sideways and you have this kind of sideways action right in here, kind of draw it out right in here. You can kind of see here, it gets that bouncing around, you get caught up. That's where, again, you'd look to employ, like those iron condor type of strategies in those range-bound markets without trying to choose a direction. So again, you got to know the risks associated with trading, understand why you would go long, why you would go short, when you'd employ naked strategies, and then when you would look to do more of those spreads overall. So hopefully this video on trend trading helps you, and we'll see you in our community. Enjoy.